Over the past year, AMD is down by 11.38%, but over the past 5 years, they are up by 167%. And so if we compare them to the S&P 500 over the past 5 years, we can see that they have beaten the market by almost 100%. Now, the interesting thing is that when we compare AMD's price to its PE ratio, we find that the company is trading at a price to earnings of around 100, which is more than double the PE ratio they were trading between 2021 and 2023. So they would be considered extremely overvalued compared to their historical price. So let's jump to our stock valuation spreadsheets and plug in the ticker AMD and jump straight to the 5-year PE ratio of the company. We can see that in 2020 it was sitting at 44, but since then it was quite steadily rising, and in 2024 it was sitting at 268. Since then it did drop to 115, but that is higher than the 5-year PE ratio and much higher than the average stock PE ratio, showing us that AMD would be considered overvalued compared to the earnings they currently generate. But let's also have a look at the price to free cash flow of AMD, which seems to be on the same path, and in 2024 it was sitting at 206. Currently it is sitting at 187, higher than the price to free cash flow and much higher than the average stock price to free cash flow. So overall we can see that AMD is overvalued compared to the earnings and compared to the free cash flow they generate, and by a lot. Now the interesting thing is that AMD is actually taking advantage of trading expensive by selling out shares at a very aggressive rate of 8.29% yearly. If we jump closer to pillar 7, we can see that indeed from 2020 they have increased their shares from 1.1 billion to 1.6 billion in 2024. And of course, by selling out shares, they are generating that sweet free cash flow. And as always, let me just quickly mention, if you find these spreadsheets helpful, you can always download them in the link in the description. Now, what a lot of investors, including me, like about AMD is the 5-year profit margin, which is sitting very high at 47%. But not only that, if we actually have a closer look, we can see that it has been increasing very steadily and very aggressively over the past 5 years, from 42% in 2020 to 50% in 2024, and currently it is sitting at 52.12%. And of course, the higher the profit margin, the more earnings can AMD generate. Now what you have to understand is that there is a reason behind why AMD is trading so expensive compared to their earnings and compared to their free cash flow. See, if we have a look at the revenue, it has been skyrocketing over the past 5 years, growing on average by 32% yearly. If we jump to Seeking Alpha, we can see that from 2015 it grew from 4 billion to 24 billion in 2022. That's a 600% increase. And so investors were willing to pay high premiums to get in on the ride. Now the issue is that from 2022, the revenue growth started slowing. And because of the huge momentum, the PE ratio grew exponentially, leaving the company overpriced compared to their earnings. Now regarding the free cash flow and net income growth of the company, if we zoom in on these, we can see that those as well have been slowing down. The net income fell from 3 billion in 2022 to 800 million in 2024, and the free cash flow fell from 3 billion in 2023 to 1.1 billion in 2024. And so based on the slowed profits growth and the overvaluation of the company, I wouldn't really invest into AMD at the current moment, but that is just my personal opinion. Now, one thing I do like about AMD is their long-term liabilities over the 5-year free cash flow sitting at only 0.61, telling me that on average over the past 5 years, AMD did generate enough free cash flow to cover all their long-term liabilities and pay them off in about 3 years. So if we zoom in closer to pillar 1, we can see that AMD indeed doesn't have that much long-term liabilities, only about 5 billion in long-term liabilities, and most growth occurred from 2022 to 2023, and with the free cash flow they generate, they won't have an issue paying them down. So now that we have covered the 9-pillar analysis, let's jump to calculating AMD's intrinsic value, first using the Graham's formula revised. And here I plugged in the 5-year earnings growth estimate at 30.28% yearly. Now take into account, this is a very high earnings growth estimate, and this gives me an intrinsic value of $87.66, which is still 50% undervalued compared to the current trading price. Now for the second valuation model, we will look to the discounted cash flow model, where we will plug in the free cash flow over the past 5 years and calculate the average growth rate. Now, as we know, it has been slowing down over the past 5 years, and I don't expect the company to grow as much into the next 8 years plus. So I calculate the growth rate of 9.3% into the future and calculate the future free cash flow. I then plug in a discount rate at almost 10% and calculate the present value of that future free cash flow. I then sum all of that up, add cash and cash equivalents and subtract total debt to get an equity value, which I divide by the shares outstanding and get an intrinsic value of $51.58, which again is a lot lower than the current trading price. Now for the multiples valuation, I want to compare AMD to Qualcomm and Micron Technology. I will take these two companies' current stock prices and divide by their earnings per share to get their PE ratios, which I will average out and multiply by the earnings per share of AMD to get an intrinsic value of only $26.16, showing us that indeed AMD is extremely overvalued compared to the little earnings they generate compared to its peers. Now, as AMD doesn't pay out any dividends, we will skip the dividend discount model and arrive straight to the ultimate valuation, where we average out these three valuation models, we get an intrinsic value of $55.13, which is almost 60% lower than the current trading price. Now, if I was to remove the multiples valuation, we would still get an intrinsic value at $69.62, about 50% lower than the current trading price, and with a margin of safety of 15%, we would get an acceptable buy price at about $60. So the company would currently be a hold. Now, in my opinion, I think that AMD is extremely overhyped thanks to the tech boom, and therefore I really wouldn't add it to my portfolio. But if you think otherwise, let me know down in the comments. And with that, thank you for watching, and make sure to leave a like and subscribe, as it really helps me out.